Yes, guys, so welcome to the second video of the first part of the technical course. So what we're going to be going through in this lesson is basic market structure. So the reason why we're starting off with market structure is because it is the key concept in smart money concepts, and even in trading in general, whether you're doing retail trading, style of trading, or anything else. Market structure is the most important thing, and even when you go down to the lower time frames, which we're going to be doing later on, you're going to realize that this is king over everything else. So yeah, what does market structure consist of? So you've got a combination of the three. You've got uptrends, downtrends, and consolidations. And usually in between uptrends and downtrends, you're going to get consolidations, that build up of liquidity, that build up of orders from institutions. And it's key. You need to have all three. And you're going to realize even when you are up in you're in uptrends, you're going to get consolidations in between them, whether, because it's going to be on different time frames, and you just need to understand how to trade in all of them. So this one's just going to be quite a basic lesson, it's just getting a brief understanding. So in a downtrend, what do you have? You've got lower highs and lower lows, lower highs, lower lows. You've just got a continuous pattern of this. And the essential thing to understand in this lesson is understand what type of market you're in. Are you consolidating? Are you uptrending, or are you downtrending? Once you understand this, everything else that I'm going to teach will become so much easier. What I'd recommend is when you get on the charts, maybe if it's your first time, or whether you've been trading for a while, just box in areas and circle in what's a lower high, what's a lower low, what's a higher high, what's a higher low. Understanding where they are and what them points are is so key, because you're going to understand, okay, so we've just hit, let me just mark it up. We've just hit a lower low. Now, what can I expect if we're in a downtrend? We're going to receive a lower high. Where can that area be? You're going to have a few points of interest. So this is the key lesson that you need to understand from this one. Uptrend as well, it's just the opposite of that. So you've got higher highs, higher lows, higher highs, higher lows. I've just taken screenshots from different time frames. As you can see, this is on the lower time frame because the amount of candles, this on the higher time frame. One thing you need to understand about price is it's fractal. So what that means is what you see on the higher time frames is also what you're going to be seeing on the lower time frames. And that's why market structure is so key, because you're going to be having so many similar things happening on all sorts of different time frames. And that's why you need to adapt your strategy. Are you going to be trading on the higher time frame or the lower time frame? Now, when it comes to consolidations, these are a bit more tricky to trade if you're new to it for the first time. You're going to be getting lots of rejections in all sorts of areas. For example, we started off here in a downtrend. Then as soon as we started to see this break of structure, we went up. Then we started receiving, you could say, this lower high, went even further down to get this lower low, started to get that break up. Now we're sort of in an uptrend. And that's exactly what a consolidation is for. It's for that build-up of liquidity and that build-up of orders from all sorts of traders, but especially from institutions. And usually what consolidations are there for is to stall price for a bit. And, there's different types of consolidations. If you get into an area of interest and you're consolidating, you could say it could be a build-up of orders to take you down onto the downtrend or the uptrend, whatever stage of the cycle you're on. But yeah, so this is it for market structure. Understand this really simply. When you're marking up things on TradingView or whatever platform you use, just mark up areas like this. Understand what type of market structure you're in. Once you understand this, it's the first key lesson, and yeah, the rest will be to come. One other point about consolidations before I go. When you're in a consolidation, what I used to do when I was understanding everything was I would draw a box of that consolidation and mark out the 50% zone. What will usually happen is once you get a break from this 50% zone, you'll start to see a massive shoot up, and potentially sometimes a retracement back down to it and up. This 50% zone, you're going to see it's going to be useful when we talk about time of day as well. And there's a certain few things that we talk about in the Asian range. So just remember this lesson, mark up the consolidation with a box, 50% zone as well, and then the rest we're going to be going through. Anyways, guys, take care.